In progress.
A very warm welcome to another edition of our successful across retail talks after our summer break. My name is Reinhard. I'm the publisher of Across Magazine, and I'm very pleased that so many people across Europe are here today. Our today's topic, in my opinion, a very, very special and important one, Quo Vadis Retail. A top-class discussion group is ready. Klaus Striebig, as usual, will lead this discussion as an expert moderator. Please take part in the discussion and ask questions by using the Q&A function. And in the next few days, we will send a summary and a video of this discussion via our newsletter. And the summary at this time will also be included in our coming print issue, which will be published beginning of October. So that's it from my part at the beginning. I now hand over to Klaus. Klaus, the stage is yours.
Thank you very much, Reinhard, and a very warm welcome also from my side, and welcome back to Across Retail Talks 2022 in our second edition this year. Hopefully you have enjoyed your summer break and you have rejuvenated, recovered whatever you've done, and you're now full of energy concerning our retail activities across Europe. And that is our topic of today's issue. We want to talk about retail, Quo Vadis, where to go, what to do, and which decision-making process we have to follow. We have a great round of people today with us, and I start clockwise, if you allow. We have with us Henri Eisenkopf from Union Investment. Welcome, Henri, and would you please introduce yourself shortly, please?
Yeah, many thanks, Klaus. Also welcome from my side. My name is Henri Eisenkopf. I'm a senior investment manager at Union Investment based in Hamburg and responsible for retail investments across Europe.
Thanks very much. Very far away from us today, and he's breaking his holiday season, Fabien Stutz, with a vast experience in retail. Fabien, hello, welcome, and hope you're fine. And please introduce yourself a little bit because you are well known.
Thanks, Klaus. Good morning, everyone. Great joining you guys today. So yeah, my name is Fabien Stutz. I've been leading real estate actually for various brands in the past, actually all over Europe. To mention some of them was Nike, and more recently actually for CNA. So had a quite wide experience actually now of real estate in Europe when it comes to retail. So I'm looking forward for that talk today.
Super, you're representing the retail market, so we are extremely curious to hear about your thoughts. We have Herman, my colleague from the advisory board, Herman Koch. Welcome, Herman, and please give us an insight what you're doing now.
Thank you, Klaus, for having me here in this discussion. My name is Herman, and I'm currently director of KERN, which is a Dutch association for real estate professionals, focusing on city center areas and shopping centers, previously known as Dutch Council of Shopping Centers. And before that, I have been working for many years with Meyer Bergman and also Multi as head of research.
Super. I think your insight and your research experience is very valuable for the discussion, and we're looking forward to it. And last but not least, we have Filip Vojtech from GfK. Filip, welcome.
Yeah, thank you, Klaus, for having me. Yes, I'm Filip Vojtech. I work for GfK and especially for the GeoMarketing department of GfK. And most of my time, I'm providing data to retailers.
Super. Thanks very much. Today's topic, we're talking about gray. Not gray as a color, but gray, G-R-A-I, which means the Global Retail Attractiveness Index. I think it will be very interesting to hear what it really means. But what we are talking about in general, so we talk about retail, and retail in these times means there's lots of buzzwords in the market. So we're talking about sustainability, community, innovation, omnichanneling, platform business. Not heard anything about product, not anything heard about sales, but we are talking about local supply, mixed-use projects, placemaking, and of course, consumer confidence and things like that. The question is, will this be the drivers or the challenging or hurdles for a prosperous retail future, and how should we work on that? And we should also consider the role of retail these days in combination with these current problems like supply chain, energy crisis, or economic recession maybe. So the question is, are we still on track with retail? Is retail that much suffering, or is retail still improving and following a positive path? We have many questions to be discussed, but first of all, let's share the results of the gray done by Filip Vojtech, and let's listen how attractive the European retail looks like. Filip, give us an insight, and the stage is yours for the next minutes.
Thank you, Klaus. So let me share my screen, and hopefully you can see it in a second. Can you see the screen? Perfect. Okay. Yes. So let me give you a short introduction on what the gray is. It's a global retail attractiveness index, and we developed it on the initiative of Cross and Union Investment in 2018. And yeah, what is the gray? It is an index that gives you an idea for the retail performance and retail attractiveness. What we do is on a quarterly level is an update of this figures. I'm showing you at the moment table with 15 countries. In total, we do this analysis per quarter for 20 countries, so 15 European countries, and then some countries also in APEC and North America. But I will show you later. And yeah, what is it about, this index? Well, we have four key four KPIs. First one is the consumer confidence. Basis here for is the consumer climate and the development. Then we have the retail confidence, shows how confident is the retail regarding the current situation and current economical developments and everything. Then the third figure is the unemployment rate. And fourth figure is the development of the retail turnover in comparison to the quarter 1 year ago. So, and that's the point. So we compare on a country level these four figures and sum it up to the total, to the retail index, which shows the development quarter by quarter or year by year. So one methodology that could be important. So the consumer confidence and the retail confidence is updated really quarter by quarter, and the unemployment rate and the retail turnover are updated on a rolling period, just to have not that large peaks in it. What you see in this data is how the retail index develops. In this example, this is the current data for second, including data of second quarter of 2022. So it's really up to date. You see that in Germany, for example, we currently have a retail index of -7 in comparison to Q2 in 2021. Then you have other countries like Italy that are ±0, and then further you have countries like Denmark, who are currently struggling most. Okay, perfect. So in total, also important, when we have a view on this 15 countries, it's a development of -3 point in the index. You can see that most of the pressure comes from the consumer confidence. It's -29 points. Not yet that much from the retail perspective, right? Okay. What we can see now is the total development over the years. So here you see 2010 developing until 2020, where you see this really strong degrees during the COVID pandemic start, then a recovery. And what we see now since the beginning of 2022 and the beginning of the Ukraine crisis, and also with a connection of the energy crisis and the inflation, is also starting a decrease of the index for the European countries. Okay, then we have this graph also for on country level. So here you see also some differences, like that Spain is developing since 2015 less stable than, for example, Germany. Okay. So let me just jump through these diagrams and come back to a map that we have also developed here. Here you can see also on the comparison of the Q2 2021 and Q2 2022, how the countries develop on this map, and also how the absolute index is at the moment. So, for example, in France, you see it's still over 100. So the index is between 0 and 200. So it's still over the average, but it had lost 3 points in comparison to the figures before. Then I have highlighted some figures here. It's the same table that we have seen at the beginning of the presentation, and I've highlighted some figures here. So you see that the strongest decrease is regarding consumer confidence. For example, we can see in Austria and also, like I already mentioned, in Denmark. Then we also see that Denmark is also struggling in retail confidence. That's why their total index is also not very positive. On the other hand, when you look for the positive signs, then you see that Portugal has a positive retail confidence and a growth in retail confidence of 10 points, and also especially Poland has a huge positive development in retail turnover, which brings Poland also in a positive development overall in regards to the year before. So then I think quite interesting figures on the 15 European countries where we are looking here on. So, and then let me go to the further countries. So then we have North America, where we look at Canada and the US, and we have some countries in APAC as well. So, and we also see the same trend, right? So at the moment, also these countries are struggling and losing regarding this retail attractiveness index. Let me jump to the map and also to the table. You see also that in total North America is losing, but it's you see a difference between Canada plus 2% and the US losing 8 points. On the other hand, Australia and APAC region is struggling, minus 14 points, and South Korea and Japan are developing positive. So here you see also the table with these 5 countries, and I think North America is comparable a little bit regarding the total figures. It's comparable to the German to the European market. and the APAC region is developing positive in comparison to the situation in North America, and also in comparison to the situation in Europe. Yeah, so I think this was a short introduction of the gray, and then I would hand over to you, Klaus.
Thank you so much, Philip. Could you go back to the full screen again? If you close your screen sharing, then we are fully seen.
Yeah.
Super.
Okay.
Thanks for that. Very nice introduction, and it's good to see what's going on in the world, in the retail world on the one hand, and of course it forces, let's say, some questions if you see that numbers or that the charts. And again, to the audience, if there are any questions, please let us know. We try to answer, knowing that it is extremely difficult to go deep into details, but let's try as good as we can. Herman, you are a researcher, and it's on my, I'm a bit forced. How do you see that on the research side? What do you think about that numbers and the results in general? What's your point of view?
Well, I think we have seen a very good analysis, and obviously when we see the results for 2021 Q2, and we compared it with the previous year, obviously what we see is in a very clear way how basically uncertainty on the consumer side and uncertainty on the retailer side, linked to rising inflation, linked to other general problems in the economy, of course trade issues, partial deglobalization, etc. There is a lot of uncertainty, and we see that basically going, let's say, filtering through the retail trade perspectives. It's very good to see how that also differs, let's say, in the world, main region by main region, but also in Europe. Obviously interesting to see, let's say, the local and regional varieties, particularly, let's say, the differences between, let's say, those markets hit very strongly by, let's say, the limitations in gas supply, and other markets which are, let's say, slightly less vulnerable for that. So I think there is it's clear that in that sense we are facing a period of uncertainty.
Absolutely. So very interesting. There's already one question from the audience, which is somewhat very well linked, because they are asked about the method which are you using. So the question is, how many people are surveyed, if that is the method used, and in each country to understand the index for each variable. So could you give us a little insight, Philip, about the method you are using for that index?
Yeah, so just a little bit. So we are using different sources, right? So it's consumer climate that GfK provides in different countries on the one hand, but also other institutes for some of these countries that we have analyzed here. So we also use as a sources Eurostat or OPEC. So it's different sources where the data came from. And then what we do is kind of standardization and also normalization of the data to make it really comparable between the four main characteristics, and also to make it comparable between the countries.
Okay, super. Thanks for that. Let's get started, because I think if a retailer sees these numbers, he will make his thoughts and his and he has some discussion. Fabien, expansion and growth. So we are talking about retail attractiveness in Europe. Expansion and growth in the retail and real estate business these days, in these times, not easy because of that uncertainty that Herman has mentioned. Is it a time, from your point of view, of opportunity, or is it simply a time for struggling for survival? And then following question could be, where and how do you see chances for a healthy growth in Europe, knowing these numbers? What's your point of view, Fabien? Let us know.
Yeah, so I think it's on my side, there's still definitely opportunity. So that's a clear statement. And the opportunity actually comes from the optimization of the fleet, actually. So I think most of the brands you see right now are still growing for some of them, but most of them are re-optimizing their fleets. meaning which store we should close, which store we should upsize, downsize, relocate, or refit as well. So there's massive opportunity there because you see a lot of brands actually just moving from one location to another one for bigger space, smaller space. And this is what the growth, I think, for them is. So that includes as well digital integration, of course, omnichannel, but as well about how do you create one P&L between digital and the store, and what is the role of the new store into that marketplace, on that environment. So there's definitely opportunity actually about all the brands which are, let's say, optimizing the fleet. That move as well creates some opportunity on the real estate market itself, because then you have some small store which was occupied before, which become empty, and then you see a lot of turnover of brand moving from one location to another one. That creates a kind of agility on which one the landlords are not used to. So that basically creates some opportunity actually for whoever has a kind of good vision about getting some store which become on the market very quickly and just occupy them. So that definitely for me, we are on a time of opportunity. Now, if you look on your second question about where, I think where is still really depend on the brand itself, about where the brand equity is located, where the consumer is located, and where the financial, as we have seen earlier in that great presentation, is located as well. So these three components are going to drive actually what the country, but every location is going to basically be depending of who the brand is and behind who the consumer is, and who the digital is. Sorry.
And if you see that interesting, let's say, different developments in the countries, Filip has mentioned the difference between, for example, Denmark and Portugal. I would never ever expected Denmark is that much suffering, and I would never ever have expected that Portugal is on that level. How do you see that? Is there a difference from your point of view as a pan-European retail representative, or how would you differentiate your country-wise expansion and portfolio management?
Yeah, I think it's, again, from us as a retailer, we start from the consumer, about where does the consumer live. So of course, there's also general, let's say, economic data, which are key, and let's say what we used to call the retail market studies in the past, actually. But now there's some two more, I would say, a second component, which is a consumer, from that population where all consumers living, or buying, shipping, working. So where does that consumer we are serving actually, or we are supporting, is located? Secondly, where that digital grow actually, the digital market, if existing, or where the potential are located. If you have these three components of the economical data we have seen, the consumer data, and the digital data or future digital data, then you can make, let's say, your opening plan and decide if it's Portugal or if it's Norway in some way. But the economical situation and the inflation and the work situation, etc., are important, but they are not, let's say, the final decision maker actually when we go in one country or another one. That's really about driven by the consumer and the potential role of the consumer, and the brand equity as well. Let's be clear on that. So brand equity is super important as well.
Yeah, thank you very much, Fabien. It's very interesting for us to hear how retailers think. And the good thing is, and it's a matter of my heart, everything starts with the consumer and his behavior and his belongings. So we have Henri with us. He's representing the investors market, the money, where the money goes. The question to the investors from that side: retail, is it more opportunities and more risks from investors' point of view? If you see that figures, what are the biggest risks from your side at the moment? Or on the other side, where are the biggest opportunities from your side? What do you think from investors' point of view, Henri?
Yeah, good question, Klaus. Many thanks. Well, I will join in with Filip that we are, let's say, more on the let's say positive side, although we are facing some difficulties. I think it's let's say sharing between risk and opportunities. I think there are a couple of risks, but there are also definitely a couple of opportunities. And looking at the risk, maybe from a short-term perspective, I totally agree with the, let's say, negative consumer mood that we're having. I mean, it's depending on countries, also depending on asset class, but overall, yes, there's a negative mood in consumers' consumption, as we have seen also from the GREI. And consumer sentiment is at the lowest since many years that we are seeing right now. It definitely will have an impact on disposable income in the next months to come, especially at the maybe lower and middle income brackets. So this will hit the market. But on the other side, I mean, we do not see that turnovers are decreasing as of today. Sure, the pandemic is not over, and the retail industry, let's say after 3 years of drastic change, is not fully back on track as of today. So we need to really carefully watch, let's say, the development here as well. That's maybe from a short-term risk perspective, but I think looking at the opportunities, it's interesting to see also from a retailer's perspective that we see that there is a bit of a refocus from retailers to local shopping. I mean, retailers have spent quite a lot of money on e-commerce investments, distribution networks, but they'll also look at their P&L as at least from what we hear, and that is maybe shows a different story. And it's not only return costs, handling, fulfillment costs, but that click per cost inflation that we see in e-commerce in terms of online marketing budget is dramatically, let's say, lowering the profits. And also due to that fact, retailers are looking back, let's say, to the local shopping markets, coming back again. It's interesting for them as well. It's brand awareness. It's not only the walking wallet, let's say, but also the target shoppers that are coming back, that are interacting with consumers, and not only interacting by click contact. So you actually can see why they buy the product, maybe also why they don't buy the product, and it's highly, let's say, profitable. And I totally agree that retailers are looking at their stores, closing down the ones that are not successful, but also keeping them and even, let's say, expanding the ones where they are very successful. And I think this is, let's say, the major impact that we need also to have. We need to see that backing and that positive view from retailers as a retail investors as well. So that's a bit, let's say, of the opportunities that we do also see in a short-term frame. Longer term, don't want to go into much detail, but there's a bit of a risk and opportunity at the same time if we look at sustainability, taxonomy, reduction of energy. We all sit, let's say, in the same boat, all stakeholders. It's retailers, landlords, center managers, but also consumers, politicians. If we work together here, if we find pragmatic solutions, then I think it's more an opportunity in terms of sustainability and reducing energy. So from that perspective, I would also see it as a positive one. And from an investor's point of view, looking at our retail portfolio, long-term opportunity is absolutely placemaking. Placemaking is totally in focus, individual USP of the assets, whether it's a domestic, let's say, big shopping center where you need to make placemaking, where you need to find the right branch mix, tenant mix, invest there, and the tenants will follow. It's what we see right now. And for retail parks, you need to have the right tenants there, and you need to invest in tenants there to have the right tenant mix. And this is, let's say, our long-term opportunity. It is that placemaking, what we have also talked about.
Thanks very much for that very positive statement on the one hand, knowing that there are still lots of challenges to be managed. So if I understood it right, you are still on or keep going to invest, but the invest will look different than in the past, right?
Yeah, absolutely. I mean, you totally have to look through the product. The product, I think, is the most important one. We have to look at the markets, which we also do, and that's why I think what GfK is doing is very important. Let's say to get a general overview. Where is it? Where are opportunities? Maybe, but where that's the challenges. But just because a country is not top ranked doesn't mean they don't have good product. So for us, the good product is something that is ranking higher, let's say. So we have to look at the individual asset. Just for an example, taking the shopping center Palladium in Prague, which is a dominant shopping center. It's making very good turnover, but we have the highest and one of the highest inflations in Europe, in the Czech Republic. So that doesn't all, let's say, that doesn't come in one row. So you have to really look at the asset itself. Also, let's say, taking Spain, for example, not the strongest consumer confidence, but the assets that we have in Spain, we do see strong turnovers coming back from the Corona pandemic. And let's say the impact of the Ukraine war and the, let's say, energy prices and gas supply is not a bigger issue for the countries in Portugal and in Spain. It's more important to look at it from a German perspective, maybe from an Italian perspective, but also Poland and the Baltics perspective. So you need to look at, let's say, the different issues that you're facing in each of the individual markets. And this is what we do probably more today as we did in the past.
Thanks very much. There's an additional question from the audience, which fits perfectly to your discussion, but try to make it as short as possible. Do you see or expect a difference in evolution between different retail segments, like, for example, fashion shoes or value retail or supermarkets or home accessories or improvements? Do you see there any difference concerning your investment strategy?
That is a good question, and that's not easy to answer in a short term. But let's say I think there are there are opportunities, let's say, in all different sectors, I have to say, and in all different markets. It's a much longer discussions, but I think what's important to understand from our point of view and what we see in our analysis is that each of the sectors are relevant. You need to revalue one or the other in sort of different ways. One is impacting where the inflation is impacting much higher, where gas and energy prices are impacting much higher, especially for shopping centers. You need to look very close there. But if you factor those in, then you see opportunities, let's say, in all different sectors, whether it's high street, whether it's convenience segment, or it's shopping centers.
Okay, thanks very much. Let's forward this question also to our researchers, Filip and Herman. Filip, maybe you try to answer first. What is your point of view on that question?
Yeah, I mean, if you remember the graph I showed how the gray developed over the last years, it was many years more or less stable, and now it starts with these waves. And so exactly also from consumer perspective, what happens with us at the moment, and we are really fast changing now our shopping behavior. So on the one hand, during the pandemic, and now with regards to the war in the Ukraine, and also with regards to the energy prices and the inflation. So today I had a call with my colleagues from the fashion panel, and they said to me that fashion retail was developing well in the first half of this year. So and what was it? The year before, it was on the ground, like nothing. So it develops well in the last 6 months, because people are returning from home office to the office. They go traveling and everything. So they need clothes, and it develops well now. But what happens next? So on the other hand, to give you a second example, is we had a great development during the pandemic with consumer electronics, and now we see the opposite. Not totally the opposite, but consumer electronics retailers are struggling in the first half of this year. So, and this is changing so fast at the moment that it's really difficult to give a prognosis for the next months or years. Yeah.
Absolutely.
I call this the jigsaw management, which is not easy. But Herman, please.
Yeah, absolutely agree. I mean, during the COVID period, obviously with the lockdown and limitations, people staying at home, we have seen an enormous growth of convenience, supermarkets, grocery. Obviously, people, forced eating at home. We of course have seen all the spend on free time, sports, do-it-yourself, etc. Consumer electronics going up. This year, I would say we already have seen a correction on that, because particularly on the durable side, a lot of expenditure, a lot of investments were made during the COVID. So obviously, they were not to be made anymore after the COVID. And what we see now, obviously, looking to the inflation and particularly looking to the grocery, there is a certain shift from, let's say, full service supermarkets to discount supermarkets. There is a certain shift from branded products to let's say, home brands. So we have all to see how long-term that is. Obviously, a big question will be how strong the winter will be. The stronger the winter will be, probably the better news maybe for fashion, that people will need winter clothes. But I think one of the main questions is, and that's a political debate in a lot of countries, how are basically the governments going to deal particularly with the rising energy costs? That's not the full inflation picture, definitely not. But obviously, there are a few buttons governments can dial on and possibly, you know, to smoothen the impact on inflation, and whether that's going to be VAT discounts, whether that's going to be price ceilings, whether that's going to be, as it discussed in Germany, for instance, the structure around the base package people can get at a certain price, and afterwards it's simply the market price. We have to see, but the extent in which basically governments are willing and able to support spending power, I think in the coming month, that's going to be a key question.
It scares me a little bit because we are a little bit dependent on the politicians, not knowing what they're doing in each and every country. But on the other side, we have to manage anyway. So that's our job at the very end.
Exactly.
So, but it's a very good point, Herman. And let's figure out. So we talked about the branches. What about the levels? So we see long queues in front of, let's say, luxury stores. We see also long queues in, let's say, welfare markets where you have to supply yourself. Maybe what happens in the middle. So the question is, in which, let's say, level do we improve and where not? What do you think?
Is it a question to me?
Yes.
Okay. Well, you know, obviously what you're saying, in general, we see, let's say, the luxury and the aspirational market being strong, although in quite a few markets, particularly which relied on, let's say, Asian tourism, people coming in from China, Russia, etc., those flows are actually reduced. So we have to see how that will develop. Obviously, value retail, discount retail strong. When we look at the middle path, obviously, there is a lot of issues in that line of business, but I think that has to deal with more parameters. And I think that's also partly, let's say, the revival of retail and the future of retail is as such. Obviously, in times of economic uncertainty, spending power under pressure, there is definitely a tendency of going from, let's say, middle market to, let's say, value discount market. At the same time, we also see there, let's say, department stores, formats under pressure, other formats under pressure. It's also where we see, let's say, new retail formats, local products, authenticity, other things popping up. I think that battlefield in let's say, the mid-level market is not only about price competition, it's also about what retail wants to be, or what the consumer wants retail to be in the future. So it's a complex story, but in the short run, I expect, obviously, spending power under pressure, consumers will be sensitive about prices if this whole energy price increases continue.
Super, thanks very much. It's a very good word that retail is still a complex topic, and it is still not known for many stakeholders in our industry that retail is very complex in these days, especially. Fabien, you are a retailer for many years, decades. You have several stations or made experiences in companies who are dealing on several levels. Now you are in a company where you are dealing with more, let's say, own brands, but you have been in a classical brand company. What's your point of view on this discussion about the levels?
Yeah, I think it's the real estate world and retail world have changed drastically for the last 5 years now. It was already at that point, actually, getting to kind of borderline on the business model with integration of digital and basically how we would monetize that for the real estate, for the landlord. It basically has completely accelerated now with COVID. Obviously, we have, first of all, it was good for during COVID time that the management actually were just discovering that real estate could be very useful. And basically support, the threat around the closure of the store. And then now actually you see after COVID, so there's the acceleration of digital, which has been massive push. And you see some brand which was ready before COVID and some brand which was not ready before COVID, which has took major advance, and COVID has helped them for these 2 years confinement, more or less, with the digital. Now you see that this world is changing. There's much more agility in terms of basically commitment, decision need to be taken on a faster way. Commitment is much shorter. Brand doesn't want, or retailer doesn't want to commit 5 years anymore because we don't know in 5 years where we're going to be, what the consumer going to be, what are the different technology and methodology you're going to have in 5 years. So you feel that this kind of what was like before COVID, the kind of end of an era, has now clearly start to accelerate, to go in different way, to think differently, to start to put some new way of paying rent and monetize actually the transaction between landlord and retailer. You see, the consumer is behaving differently as well. You know, we talked earlier about consumer going back to works, traveling, etc., but not yet completely up to speed, and there's some new habits. So we need to adapt ourselves with new consumer habits about not going to work, etc. Short-term commitment, digital integration. So that's basically what makes our, I wouldn't say challenge, but more the opportunity we have ahead of us, and how do we have to transform our existing fleet rather than basically growing them. So I think for me, the biggest work that most of the brands are doing now, and we're doing it actively, is really optimizing the fleet and transforming the fleet to the new consumer behaving. So,
super, thanks very much.
That was clear enough actually for your plan.
Yeah, no, thanks very much. So it's very important to discuss it, and of course everybody knows that we are walking from, let's say, crisis to crisis at the moment, and we are now managing more crisis times than the other one around. So, but to be honest, Fabien, is it these days somewhat common to talk, because we have this also supply chain problem still, not only energy, it's not only COVID, it's much more meanwhile. So does it make sense these days to talk about a pan-European growth, pan-European expansion rollout, or is it just advisable to focus on optimizing the existing portfolio or fleet, how you name it?
Yeah, I think it can go both. Actually, it can go both ways. And we talk about European growth. It been as well. It could be a lot of, you know, we talked earlier about brand equity. We talk about data, the consumer data. We talk about financial data. That basically going to drive you to one specific area. That specific area can be treated as a cluster, meaning that you're basically going to invest still on a European level, but most of your investment, opening, digital investment, blah, blah, in the same area as a cluster. So instead of opening one store in France, one in Austria, one in Switzerland, you open 5 in the same market on the same year. So all your supply chain challenge basically is covered because you have one market to manage. And then you build your brand equity, you basically integrate digital in that, and that become one of the key marketplaces to grow around in Europe, actually. So that's one way of doing it. Some other brands are keeping as well the fleet optimization by, let's say, relocating and optimizing, mean as well closing some stores. So some of them are closing some stores to have less point of delivery and basically optimize the supply chain. So less store but bigger store, less store but better store, and they basically focus their supply chain actually effort around of that approach. So I would say both way actually does works, or the clustering approach, or let's say the optimization approach. Yeah.
Thanks for that. So Henri, we also need to hear the investor's point of view. So we see these lots of different market differences and of course challenges, let's call it like that. What are from your point of view, the major drivers for these differences, and how will you manage it from investor's point of view to see it improving or to have an optimistic view on it? Henri.
So you mean from a, let's say, different market developments throughout Europe type of view? Well, I think, well, first of all, we see from consumer perspective, sure, there are some differences in the mentality of shopping. Germans, let's say, are more saving in times of a crisis, and we see that other countries are more spending in time of a crisis when inflation is high. So I think you have to deal with that mentality and also make use of that in your, let's say, shopping center tenant mix. Yeah, I mean, in Spain, people go to their centers in the evening at 7, 8, or even 9 o'clock. Then they go for dining. So you need to adopt to that. This is, let's say, different from other countries in the Nordics or even Germany. So I think you have to adopt to that as well. On the other hand, we see from a retailer perspective, yes, you also need to adopt to changing behavior. I mean, Fabien was saying that good stores want to be expanded. So you see, this is what you have been doing for the last 20, 30 years already. So you have adopting, let's say, to consumer and to retailers' behavior. So if you need to enlarge the space in your shopping center, you basically did. And we see that, for example, New York was trading at 1,000 square meters. Now they're demanding for 2,500, for example. So you need to adopt to that, and you need to find, let's say, suitable shop sizes there for different retailers that are popping up, that are staying, that they come to stay for longer. So this is something what we see on a continental Europe base. Not too many changes, because if a retailer has decided to go for a new shop format, it doesn't really differ that much from Poland than to Germany or to Spain. So there are some differences, but interestingly enough, from a retailer perspective, we see that there are more similarities. And we see that especially, for instance, for green leases, that we are actually see retailers demanding us to that we kind of sign green leases, and they do this for their whole portfolio throughout continental Europe. So as said, there are differences from a consumer perspective and also from a tenant perspective on a local market, on a national level, where you need to have, let's say, the USP tenants in your shopping center from a national level. But from an international level perspective, retailers are more acting in the same way as they do in other countries. So yeah, this is basically what we are seeing.
Okay, super. So, but it's on the one hand seen, and Fabien has touched that topic a little bit. There's still a little kind of, let's say, conflict of interests from both parties. So, retailer is expecting, let's say, shorter lease terms, and the investor needs to have a longer lease term. Sometimes you have to reinvest, whatever it is. This kind of conflict of interest on a general basis, please. How could you manage that? Are we in the industry, not we in that round in the industry, for example, fast enough to adapt these needs? This question is directed to all of you. Henri, would you love to start?
Yeah, if I may start, indeed, that's a critical point. What we see and how we try to cope with that within our portfolio is actually quite simple. We see that for the centers and for the assets that we have pretty much in focus, we are investing quite heavily because it's needed. You need to, let's say, work on your assets, and that's why we, let's say, also invest pretty heavily. Double-digit investment programs, as it is in Manufaktura in Poland or maybe in Palladium in Prague, as we just recently did. You need to make that difference in quality of stay, in appearance in the asset for the consumers. And not only let's say the tenants appreciate our investments, but they kind of act in concert and invest themselves into a new fit out as well. They try new concepts and ideas, and then they also sign longer lease contracts because they also want to secure that good location for the future. And this is, let's say, what makes the difference for the consumer, and then makes, let's say, the difference and the successful retail investments from an investment perspective, but also from a retailer perspective. And to be honest, yes, it is needed that we have long-term lease contracts as well, because I think probably not from unit perspectives that much, but from a private investor perspective, you need to have bank financing in order to invest in your asset. And you are, let's say, struggling more if you have shorter lease contracts. So let's say then for private investors, it's a bit more limited to enhance their asset and also to generate, let's say, a better asset for the retailer. So it goes hand in hand with the retailer for so many parts when it comes to lease lengths, but also, let's say, investing jointly together.
I think Fabien has something to add.
I'm fully agree actually with what I was saying. Yeah, because I was fully agree actually with what was saying earlier.
Super. So I would love to forward it to Filip. What is your point of view? Is the industry fast enough to adapt these requests from all sides?
Yeah, I would like to add one point that we haven't discussed so far, I think, and this is something where the investors and also the retailers have to be strong as one unity together. So, and this is about the environment of shopping. So it's not only about shopping. But when we speak about shopping centers, Henri, you mentioned some of them. So then from consumer perspective, we need, I think, and this is something that is also since years a topic in the industry. We need to change the environment from the perspective of the consumer. So the shopping center, as an example, is not just a point for shopping, but we spoke about placemaking. For me, it's also can be a place to meet, to include a cinema like it already is in some shopping centers, or to offer fashion shows or other events like concerts, or lots of entertaining service, retailer service, entertaining events, and to combine all of these. So to make it also more attractive. This is, like I said, discussion since years, even before the pandemic, when it was the question about stationary retail versus e-commerce, right? So it was the same. How can we get more attractiveness? And these topics have not changed, I think. And from consumer perspective, this is how what I see as something positive that investors and retailers can develop together.
Super, thanks. Herman, your point of view.
Yeah, of course. I mean, it's a difficult one, because obviously business is changing rapidly, and we see that retail business in particular is changing rapidly. And bricks normally tend to be rather well fixed. So, but obviously, when we look at the real estate world, and I think there is a lot is happening, and obviously a lot is still to happen. But you know, it already reference was made to placemaking, and I think placemaking that continues to be very important, will probably even be more important in the future. And I think the value of placemaking is not only about design and concept. It's also about active management. It's also about connecting with the local community, and let's say with local products. And I think that softer side of placemaking probably is going to be more important also in the coming years. If you look at, you know, what the consumer wants, what people want, being critical on ESG, being critical on different aspects of environment, etc. Besides that, also mentioned already by Filip, obviously the whole shift of, let's say, monofunctional retail real estate, whether we are talking about high streets where upper floors are empty, whether we are talking about monofunctional shopping centers, to basically an evolution back to center areas as we knew them in the past. Mixture of function, center areas where you can live, where you can work, where you can play, where you can shop, etc. Easily said, but obviously to create that kind of environment, or to, let's say, re-establish that kind of environment in terms of regulations, investment strategies, etc., that's probably also still a ball game, still a while to go. For instance, the introduction of mixed-use property funds, it's a complex discussion. How do you materialize that? How do you establish on that? So, but I think that's definitely going to be a key element. And I think also, last but not least, we were already talking about lease contracts. And of course, it depends from investor to investor, large scale versus small scale. It depends on, let's say, that the investment being made, you know, to make a unit work for a tenant. Talking about a cinema is something else than talking about a regular shop. But I think indeed some smoothening, flexibilization in contracts has to occur in order to be able to accommodate change. And I think the main change in that sense is, let's say, real estate investors. And again, a lot is happening on that. Basically, real estate, the role of real estate investors changing from, let's say, providing space to also providing a service.
Thanks for that. Fantastic. And one conclusion of your words could be, so brick and mortar is not longer fixed in that concern. It's the only thing that will remain is the place on the one hand, but the rest is absolutely flexible and has to be handled and managed flexible. And very fast for sure, because that was the starting point of our discussion, because the consumers are changing their behaviors extremely fast. So we are talking about retail today, and of course we have also to discuss some, let's say, retail success factors. So what makes a retailer or retail concept really successful these days, if you see it on a European level? Any idea? We can start with Filip, spontaneously. What is your point of view? We end up with
brand image.
Okay.
So just to mention, one.
Okay, brand image. Henri, your idea.
I would join in, let's say, coming from a retail real estate investor perspective, I would add in, let's say, integrated locations is super important for the future. Also, that is touching the topic that was mentioned by Herman is that mixed use. So I think location there makes the difference, let's say, in the future even more.
Could you define that integrated location a bit more?
Yeah, I mean, yeah, absolutely. Integrated location, let's say, differs from different shopping types, and the high streets needs a bit of a different integrated location than, let's say, a retail park. But all of them have their USPs. So from a shopping center perspective, I think it's very important to let's say concentrate of your close catchment area, and we see that residential is let's say coming back to the city as well. You need to adopt to that. You need to adopt to a new way of shopping, not only shopping, but new way of meeting, of meeting people, of let's say medical services that you need to apply, of Kita service that you need to apply, and all that, let's say, is changing. And this is what we not had in let's say shopping centers or integrated locations in classical shopping centers, let's say 10 years ago. And this is something where you constantly need to adapt. So you need to find the right tenant and also, let's say, user mix for that individual location.
Okay, thanks. Herman, your point of
view? I agree on brand image and location, but obviously brand image, what does it contain? I think for people who want to go to a certain shop, what do they expect? They expect, at least following of the few items. They expect to have a certain experience, have a good time. So the experience component is important. Going to a shop, and particularly when it's more complex good, they expect knowledge, they expect advice, they expect expertise on the products they want to buy. And of course, when you go to a shop, take into account a bookstore, but even a supermarket, you want to explore, you want to discover, you want to browse, you want to see new things. And obviously, on most levels of shopping, you simply want to have a good time, you want to be excited, you want to give yourself a treat. And I think brand image, location, placemaking, all those elements, it comes somehow together. They have to contain at least a couple of those aspects to stay attractive to the consumer. And the consumer is very fast, particularly with social media. They discover things and evaluate things within minutes. So obviously that's what I think a good brand, good location should contain.
Sounds like a complex thing.
And I can fully agree.
It is, Klaus, unfortunately, no easy game. And then,
Fabien,
of course, the consumers want to be affordable prices. Look at the supermarkets. So it's not an easy game.
Fabien, your point of view?
No, I was saying I fully agree with what Herman was saying. I think the experience, it's at the middle of everything. Consumer have access on everything he wants through his mobile phone, actually. He has basically the brand, he has the knowledge. So he has basically access very quickly to his mobile phone. If we want to retain the consumer, we need to offer him something different. It means a great experience. And great experience about what Herman was saying about the advice, about the product, about the digitization, again, about how do you support the consumer through digital to your store, and what are the role of the store. So the role of the store itself have to change. You need to move from a mercantile place to more an experience place. And this is how brand can succeed. And then that's been to be extended as well to what I was saying, I was hearing earlier as well about in the city center, or in shopping mall, the retailer cannot win by himself. You need to have as well to have the landlord support for making sure that this place, actually, this retail place is becoming a kind of shopping mall place, actually. What I mean is like, it can only be a great experience into the store. It needs to be a great experience in shopping mall or into the retail street itself in city center. So that needs to be wider than just on the retailer level. But for me, again, consumer is definitely the key of the success factors.
My words. So it's unbelievable, you guys. So we're very close before the ending, and we could discuss another 2 hours, but we have a limited time. So you have 3 words or 3 answers, very, very briefly and very short. So if we could advise our colleagues outside who are listening to that webinar in the real estate industry in general, what would be your top 3 recommendation to cope and manage a bright retail future? Henri, your 3 recommendations, please.
My first one, I think this is for us the major one, is working together all stakeholders need to work together in order to make successful products and desirable products. The rest is the second one would be flexibility. I think on both sides is needed, and we need to talk to each other. And the rest is probably then trust in the success of retailers, trust in the success of investors, because that's what we, let's say, need from the beginning in order to achieve successful products.
Thank you very much. Filip, your 3 recommendations, please.
Yeah, my 3 recommendations is to offer to the consumers great service, experience, products. That's it.
Super. Thanks very much. Herman, your 3 recommendations?
Oh my goodness, I'm probably going to repeat a few things. Sorry for that. But,
No. You need new ones.
Placemaking, with the placemaking, focus on let's say the local community you are serving. Obviously, an increased need for flexibility to make that possible. And again, it's a game you play together with the stakeholders. You can't do it alone anymore.
That was something new. Thanks for that, Herman. And Fabien, you are the last one in the row.
Yeah, no, same. I think it's experience, about just being the experience and services, and it's about being agile, really easy to adapt actually on the consumer with the landlord, and be partner as well. You can only win as a team. Again, it's like win with the landlord, be a partner between your brand and the environment where you support your consumer to give him a great experience.
Thank you very much. It was a great discussion. I appreciate very much your contents and your insights. And I think it was very valuable for the audience as well. The good thing is a bright future on the one hand, but the negative thing, we have to work a lot on it to make that happen. But we will manage it, I'm pretty much sure. Reinhard, we are now finishing our discussion. It's now your job to finalize each and everything.
To close this. Yeah, from my side, many thanks for this really extremely exciting and informative, entertaining discussion. Also, thank you very much for so many valuable inputs and ideas you gave us for our future editorial work. And as mentioned, we will send a newsletter with a summary of this discussion, also a short video. Many thanks to the panelists. Many thanks for watching this Across Retail Talk. And I really hope that we see you soon at another Across Retail Talk. Yeah, greetings from Vienna and goodbye.
All the best. See you soon. Keep it high.
See you soon. Goodbye.
Thank you. Thank you very much.
Cheers for that.
Thank you.